I've traded countless strategies within my trading career, but there is one that stands out to me, which is one of the main reasons why I'm consistently profitable today. It uses three very simple concepts. It's easy, reliable, and repeatable. And it's that simple that a fresh beginner could start trading this today. So the goal of this video is very simple. I'm going to show you all three of the concepts that this strategy uses, and then I'm going to show you some live examples on the charts so that you guys can go away from today and start backtesting this and integrating it into your trading plan. So without any more messing about, let's get straight into the video. Okay, so the stupid simple 1 minute scalping strategy that I've used every single day. Now, before I get into how this strategy actually works, there is a slight setup that we need to do so you guys can understand where this is most effective. So as said in the intro, the strategy is extremely simple, reliable, and repeatable, and it trades one singular index. So the actual index that we're going to be trading here is NQ, and that is because it is very simple. We all see the same chart, we're all trading the same price action, so it is very reliable. Now, it uses three very simple but effective concepts, and that is accumulation, manipulation, and distribution. So the guys who have watched the box strategy video, you guys will know the actual concepts behind this strategy, but I'm going to give you a lower time frame entry model so you can catch some super nice RR entries nice and early. So for those who don't know what AMD is, it is a very simple concept, which I'm going to go into in a minute. But we effectively have accumulation, which is just an accumulation of orders. So this is usually like Asian range or, areas of consolidation. It's where price is moving very tight and there isn't much volume. Now, after that, we get something called the manipulation phase. And this fakes out a lot of traders, mainly breakout traders. But what happens is we manipulate to the upside or the downside, taking out all of this resting liquidity here before reversing into our distribution phase, where we actually expand into the actual direction that price wants to go. So our job here is to find out the most valuable place to get into an entry and have solid confirmation where we're going to reverse. And there is a few things that we can do, which I'm going to show you very shortly, to actually enter these trades and have a win rate of above 76%. So let's get straight into the concepts. Now, step one of this strategy is to mark out areas of liquidity on the 5 and 15 minute time frame and the time frame that we will be trading as well. So before you do anything, you need to understand when this trading strategy occurs. And it's actually from 9:30 a.m. every single day. So that's Eastern Standard Time. If you're trading from the UK, this is 2:30 in the afternoon. So 14:30 British Standard Time. So firstly, our time window is 9:30 a.m. till 11:30 a.m. So we've got the first 2 hours of session to actually locate and find ourselves an entry. Now, what you want to do is on the higher time frames, such as the 5 and the 15, is mark out areas of liquidity. Now, the reason I say the 5 and the 15 and not the hour or the 4 hour is, although this is very useful and it is a concept that we use, we just want to mark out the closest areas of liquidity that price could draw to closest to open. So this is going to be for two reasons. It's going to be to find our area of manipulation and our area for profit targets within the distribution phase. So as you can see here, we have our area of accumulation here. So what we need to do is just mark out some significant highs and significant lows that price could most likely draw towards to. So there could be a few areas here. There could be 1, 2, 3, whatever it is. Just get them marked out so that you can refer to them as we get into New York session. And it is as simple as that for step one. Mark out these areas and you are done with the first step. Now, step two of the strategy, which is going to occur at market open, is we're going to wait for a sweep of the liquidity that you've drawn out and a manipulation. So you should have already formed a slight daily bias. Although it's not necessary, it does help out in a discretional sense. So as you can see here, we have 15 1-minute candles, but in a sense, this is just one 15-minute candle. So at 2:30 open, which you can see right here, that is where we are going to be looking for our manipulation to either the upside or the downside. And we want to see a sweep of these areas of liquidity. So the areas that we drew out in the previous slide, these are going to be the areas that we're waiting for the manipulation leg. Now it's very easy to spot because we're looking for a box. That is why this is called the box strategy. The area of manipulation, accumulation here is a consolidation of orders. So there's orders resting at the highs and orders resting at the lows. Now, from a mechanical perspective, whatever side our manipulation leg forms, that is going to be our area of liquidity that we take out, and the opposing side that we actually draw out is then going to be our target for price when we distribute to the downside. But this has to have confirmation, and it must show strong confirmation. So that is it for step 2. We're simply going to wait for a sweep of this liquidity and a manipulation to the upside or the downside. What I would recommend is for a close of the first 15-minute candle, and I'll show you this within the actual live trading charts. Now, as for step 3, you have completed pretty much 90% of the strategy. It is very, very simple from here. So where we've got to up to now is we've marked out our areas of liquidity. So we've got our highs and we have our lows here. So these are our areas that we're both waiting to target and to take out for the liquidity. So once these highs are taken out and we've manipulated to the upside, we have now manipulated. So this is our manipulation here. As you can see, market open was here on this blue line. Now we need to wait for a confirmation that we are going to push to the downside. So as you can see here, we manipulated to the upside. We had an initial push down, leaving a slight imbalance here. And then price has respected this area and then closed below what we can see here is an inverse fair value gap. So that is going to be our area to enter our trades. So as you can see, we have an inverse fair value gap here marked out by our box here, and this is going to be the area that we're taking our trades. So in the direction that we're wanting to go, you want to find, for example, if we're wanting price to go down to the downside, so bearish, we want to find a bullish fair value gap on the 1 minute time frame, and we want to see that get inversed. Now, there is a few rules about the inversions, so just listen in very closely here. An inversion is only valid if we close a solid body below the actual inverse fair value gap. So for example here, if I just clear these drawings, you can see that I've marked out my inverse fair value gap from this bottom wick here to this top wick. This gap right here is where the inversion is. So if we don't break solid below with a body close, as you can see here, we are simply respecting this fair value gap, and that's when we can just keep pushing to the upside. So we really have to see some momentum to the downside for this to be validated. And one of the first signs for that is a solid body close below. So that is going to be our entry confirmation to actually get into this trade. We're going to put our stop loss above the highs here, and we're going to target these areas of liquidity at the lows. So as you can see here, we'd enter right there, we'd have our stop loss at the highs here, and we'd have our take profit at these lows. So the entry can vary from, a 1 to 2 all the way to a 1 to 5. I've noticed with my backtested data, I only ever aim for between a 1 to 1 and a 1 to 2. It's more than enough. I'm in and out of the trade very, very quickly, but that is the main concept of the entry. So what have we found here? All we've done is mark out our liquidity on a higher time frame. We've then waited for a manipulation, and then we are capitalizing on the distribution. So that is why this strategy is so valuable. It uses very, very lower time frame confirmations just to confirm our direction. And now we don't need to be aiming for these crazy RR trades. We're not aiming for 4-hour lows that are 6,000 points away. That's just ridiculous. We just want to get in, take our 1 to 1 or our 1 to 2 and capitalize on this move. Because it's a mechanical setup, we can react from all kinds of areas, and that is why we use the area from open here, find our manipulation leg, because beforehand is generally where our accumulation forms. So I'm going to show you some examples. I'll show you one on the live chart first, and then I'm going to show you 3 examples of the strategy playing out. These are some trades that we actually took within our community, which I'll also talk a little bit about throughout this video. But yeah, I'm going to show you a little example on the chart, and then we'll show you some examples of some live trades. Okay, so as you can see here, this is a textbook setup. So as you can see, before New York Open at 9:30, we had our area of accumulation. So this is known as a consolidating area. So price is gaining orders. It's a very, very tight price range. There's not too much happening. And as soon as we get the New York Open candle, which you can see right here, you can just see from the volume in itself, we had New York Open, and we've manipulated to the upside and actually taken out these highs. So before we even play out this strategy, you need to mark out your highs and lows. So we have a low here, we have triple lows here, and then we have some highs here. And as you can see, when we hit New York Open or Stock Exchange Open, we manipulated to the upside here, forming our manipulation leg. So for a lot of people, we're going to be seeing, areas, a load of buyers getting into these entries and getting completely stopped out. But this is where we step in and take our entries. So as you can see here, we're going to use the bullish fair value gap that open actually formed and simply wait for an inversion below this area. So as you can see, we consolidated, we came down, and we've then moved back up again, respecting this bearish fair value gap. So that's just even more confirmation that we wanted to drop lower. So with our inversion marked out, all we were simply waiting for was a solid body close below this fair value gap. And what do we get here? Let me zoom in so you can see. We actually got a solid body close below that fair value gap. And from there, we absolutely dumped. So what would we do here? We'd have our entry at this low here. So off this inversion, our entry would be here. We can then have our stops just above this fair value gap here because we currently respected it here. And we then target the areas of liquidity. Now in this example here, we took it out pretty quick. So this can be our break-even area, which in that case would have tapped us out. But there is areas that we can target just below, which I don't actually have on this picture. But as you can see, we absolutely dumped to the downside, which is really, really good to see. So that is the strategy overall. It's very, very simple. There's no crazy concepts, no crazy indicators, and the indicators that we do use are very, very simple. Now, what I'm going to do now is head over to TradingView and show you 3 examples that we've taken this week, because as I said, this strategy occurs pretty much every single day. So I'll see you on the chart and I'll show you some live examples that our team took this week. Okay, so as you can see in this first example, I'm on NAS 100 right now, and I'm on the 1 minute time frame. And I know it doesn't look like much right now, but after I've broke down every single concept of this strategy, it's going to make so much sense, and you're going to see how easy it actually is. So firstly, this line that you can see right here is simply market open. So as you can see on my chart right now, this is at 14:30. So this is market open. We're not going to be taking any trades before this. We're simply going to be waiting for 2:30 onwards to take a trade, or 9:30 Eastern Standard Time. So with that out of the way, let's just see what's going on this chart right now. So as you can see, prior to 2:30, we actually had an accumulation of orders. So as you can see here, this is our box. So this is the area of accumulation. So it's a consolidating tight range of orders. There's not really too much going on. As I said, we're on the 1 minute time frame, so this is not a wide range whatsoever. As you can see, we are working within a very tight range. Now, what we're waiting for is market open. So the very first thing that actually happens within market open is we manipulate to the downside below our box. So we simply just mark out our areas of our highs and our lows. So as you can see, we've got a high here, we've got highs that have been swept here, but these are our highs, so we are going to be targeting them. Now on the higher time frames, such as the 5 and the 15 minute, we have some more significant highs. So as you can see here, we have a significant high. As you can see down here, we have a significant low. So we're going to be waiting for a sweep of these areas. So that is our 5 or 15 minute areas that we're going to be looking for to target. But as for the actual box itself, these are the areas that we're going to be looking at. So as you can see, we headed into open and we actually took out all of these lows formed within this box. Now we simply just need to wait for confirmation to enter and take our 1 minute entries, which is very, very simple. Now, let me just zoom in here so you can see. Now, you will notice that we didn't actually take out these lows on NQ, but that's why we use something called an SMT, and we're going to use this on ES. Now, don't worry, I've got something for you at the end of this video, so make sure to stick around because you're going to understand all of the confluences we use outside of this strategy. This is just the main foundations of how we take entries from a mechanical perspective, but there is a few confluences that we can take every single day to really add to that win rate. So, as you can see here, we didn't take this low, but on ES we did. And now we simply just need to wait for confirmation that we're going to push to the upside. So as you can see here, on that way down, we actually had an inversion right here. So let me just zoom in so you can see a little bit better. Let me zoom in. So as you can see on the 1 minute here, we had a bearish manipulation to the downside, and on that manipulation leg, I have marked out the inverse fair value gap that you can see here. So now all I need to do is mark that out as our 1 minute IFVG. and wait for a solid body close above that inversion. Now, as you can see here, very, very quickly, we got a nice V-shaped recovery here. And all I simply need to do is put my entry at this close with my stop loss just below these lows here, and then my take profit at either the accumulation area from the box or our 15-minute swing high. And as you can see, after a bit of consolidation at the start, we absolutely smashed take profit. So I'll put the screenshot of the actual profit that I made on this trade on the screen now so you can see. This is just one of 3 entries that we took within our Discord, but I'm not finished yet. So let me just scroll through and show you the next entry that we took live within our trading session. So as you can see here, this is Friday. So let me just scroll to the next one and show you when the next entry was. Okay, so this is the second entry that we've taken live within our trading session, which you guys can access completely free. But let me just break down this whole area of price for you guys. So once again, we have our area of accumulation here. We're working within a very, very tight range. There is really not much happening before New York Open, and I've marked out here 230. So again, we're not going to be trading this area of price. We're only going to be looking at the charts from 230 onwards. And as you can see here, we actually faked out to the downside. So in this sense, you can actually take an entry to the upside. So as you can see here, we manipulated down, took out these lows, and then pushed to the upside. Now, from here, you can see that we actually had a inverse fair value gap right here. So as you can see, I'll just mark this out. So there was an inversion here, which we did actually solid body close above. So you could have taken an entry here with your stops below this low here, and then targeting the 15-minute highs. Now there is something to note here, because this inversion was before 230 and it wasn't a part of the manipulation leg, I invalidate these kind of entries. They are not as high quality, and we want to wait for all the price action from 230 onwards when we have a lot of volume. So if you haven't seen already, there is an actual entry within this area. It just requires a little bit of patience. And as I said earlier in this video, it's best to wait for the first 15-minute candle to close. So as you can see here, we have 15 candles. And on the next candle open, we actually had an SMT here. So we took out this high on NQ, but we didn't on ES, and then we pushed to the downside. So how could you enter this trade? So as you can see, we inverse to the upside. So from a buyer's perspective, we were actually disrespecting bearish price action here, and we wanted to push higher. But the overall bias for the day was actually bearish, and this is something that we actually cover within the PDF, which I'm going to show you later on in this video. Now, with that being said, you could have taken a little one-to-one entry here. That's absolutely fine. You could have taken an easy one-to-one and taken out, but the actual entry that we were looking for was right here. So as you can see, we had a bullish fair value gap here with an SMT. So as you can see, let me draw it out here. We had our inverse fair value gap, we had our SMT, so we actually took out all of this liquidity here, and then we pushed to the downside with momentum. So this candle right here really did show momentum to the downside, and it showed that we wanted to push lower. So all you had to do was simply put your short position from this low right here with our stop loss just above the highs, targeting this low that was formed at open here. So as you can see, this is our new area of liquidity. And once again, we absolutely smashed TP. Now, like I say, you could have entered from this inversion here, but the setup quality was so much lower because of the fact that the fair value gap was before New York Open. So you could have taken a small entry here at say if you went to the body close, you could have taken a one-to-one right there, but the actual entry was right here, and the true manipulation was above this box right here. So that is the second entry that we actually took within the community. I'll put the profit on the screen now so you can see. Let me just show you the third and final entry that we've taken for our team this week, just so you can see how good this setup actually is. Okay, so this is the entry that we've taken today within the community. So as you can see here, Wednesday the 1st of July, and this was a very, very simple setup that a lot of you guys should have spotted, and if you didn't, you need to start capitalizing on this strategy. So as you can see, before New York Open here, we had our box. This line here, again, is our area for New York Open. So we have 230. Remember, we're not taking any trades before this. We're only focusing on price action after 230. So as you can see, we had our area of accumulation here. We had some lows forming. We were working within a very tight range with lows and highs. very, very tight price action. So we simply had to just wait for New York Open to manipulate to the downside. And as you can see, at 2:30, we manipulated to the downside. Now, how could you have capitalized on the reversal to the upside? Although this isn't as strong of a move that we usually expect, and the distribution leg wasn't too great, but it still happened. So zooming in here, we've simply seen our manipulation to the downside. So we've taken out all of this liquidity below, and now we need our confirmation area. So as you can see here, we had a 1 minute fair value gap on this manipulation leg. So we draw our 1 minute fair value gap. So we'll mark that out as 1 minute IFVG and wait for a solid body close above. And as you can see here, we did actually close with a solid body close above. Now, I faded this very first entry. For me, this candle just wasn't enough. So if I can zoom in here, you can see that we kind of made a bigger wick than we did body. So I wanted more confirmation. So I waited for a retrace and then an actual push out just to really show that we were going to the upside. So you could have entered on this candle, but it was a little bit more risky. So I waited for actual confirmation, which was this candle right here. I had my stop loss just below the lows here, and then my take profit just above this area of the highs. So as you can see, we had a super clean and easy 1-to-1 risk to reward ratio trade. And I'll just put that screenshot on the screen now so you can just see proof of concept of the entries that we do take every single day. Now, if you guys have made it this far into the video, I hope you've found some value and you can see how simple this strategy actually is. And for the ones who have stuck around, I want to give you our free strategy playbook, which you can simply download by heading to our free Discord in this YouTube video description. It's so simple. It gives you every single step of this strategy broken down with live examples, and it even gives you some extra confluences that we spoke about in today's video, so you can really have some high-end confluences to capitalize on this strategy the most. Like I said, I hope you guys have enjoyed this video and found some value in it. If you have any questions, be sure to leave them in the comments section. I'm sure to get back to every single one of them. Make sure to leave a like and subscribe if you haven't already, and I will see you in the next video.